Good morning, traders from whichever side of the country world you're watching me from. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. Quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only, and it shall not be considered as investment advice. Trading the financial markets do carry a degree of risk, but don't worry, I'm here to help you look at the markets the right way. I would want us to go over to the promotions that we do have currently ongoing. Remember, we are here because of you. And we do have a few promotions currently ongoing whereby you have an opportunity to open a Shield 500 account. Now, an interesting thing about this account is that whatever money you do deposit between $10 and $500, within the first 25 days, if you go through any losses, we are going to refund you the full amount. Quite interesting, meaning you're going to be trading on real live markets risk-free. Not only that, we do have other promotions currently ongoing. When you go over to our promotion segment in the HFM website, we do have Battle of the Elite round number 2, whereby you're going to have an opportunity to become Kenya's Don or Busy. It's going to end tomorrow. It's going to end today, whereby one of you, actually not one of you, but 13 of you are going to have an opportunity to be Kenya's Don or Busy. Win 650,000 Kenyan shillings. That's going to go to number 1. Number 2 is going to walk home with 260,000 Kenyan shillings. Number 3, 130,000 Kenyan shillings. Then we're going to have 10 winners in the lucky draw walking home with each 200. Yes, you heard me right. 10 to 500. We have just lowered it. If you go over to our website, the terms and conditions are currently updated. Now, looking at the leaderboard, we do have baddest trader 302.54%, Karuduoru, who's going to be number 2, 273. Then we have Sami at number 3 with 47.65%. Not only that, we also do have virtual to real demo contest, whereby you had an opportunity to trade with the demo markets risk-free, whereby Juliet Wambui Kareri currently at the moment has 12,393%. Wow. Number 10 is Benson Kiarie Mugo, who is up 705. Number 1 is going to be credited $500, and then they're going to walk home with a trading bonus and crystal obelisk. Number 2, $300. Number 2, $300. Then number 3 is going to walk home with $100 credited to their accounts. We are about to start the Rift Valley Pip Stop, whereby you have an opportunity to join us. Come engage with us. We are going to have our mobile market analyst, Mr. Samson Mzera, and a few other people, few really good traders who are going to help you. If you're in Rift Valley, we are going to be having our Rift Valley tour starting next month. Kindly purpose to attend. Now, moving over to the economic calendar, whereby, remember, when you wake up in the morning, when you start your day, you first look at ideas. What are you going to look at? Let's say, for example, in myself, I have 308 assets. I cannot buy and sell 308 assets, so I need to look at how I do that. Now, when I wake up in the morning, the first thing I do, I look at the economic calendar, generate ideas of what I'm going to do. The chef, yes, we shall be waiting for you also. We have Tony Legendary. What if I deposit $10? Will I have the protection? Yes, you're going to have the protection. Now, go over to our website. The terms and conditions have been updated. Kindly go through them, okay? Now, in the morning, we did have PMI data coming in for the Chinese yuan, quite interesting, whereby the non-manufacturing sector actually did tick to the upper side slightly above the expansion region. Now, the 50 region is usually considered whereby the market is neither expanding or contracting, and the data did actually come out at 50.1 for the non-manufacturing. But looking at the manufacturing sector, it did take a beating, whereby the previous number was 49.8. We were having a consensus of 49.6, but actually the number came in lower than anticipated at 49.0. And we would want to look at a chart of the US dollar against the Chinese yuan, whereby we have been seeing the market rally to the upper side. If I can just pull up a chart of USD CNH, which is the Chinese yuan, whereby you can see ever since 29 of October, we did find support around this region. If I can just pull my crosshair, which was at a 7.08773, and the markets have been rallying to the upper side. Currently, at the moment, we are trading just on Monday's high opening price. Quite interesting. If we do break to this upper side, I would consider looking at more strength in the dollar against the Chinese yuan. You can see ever since the markets have opened today during Asian session, the markets have been rallying to the upper side. Hezron, welcome to the channel. Lukman, welcome to the channel. Now, looking at the past two candlesticks, we are rallying to the upper side once again. If we do close above this region, I would consider looking at more net long opportunities, potentially prices coming to fill these inefficiencies that we did have on Monday session. And I want us to look at the data. I want us to look at what has been happening currently at the moment, whereby manufacturing PMI once again 49.8, quite interesting, below the expansion region. Now, if we look at non-manufacturing, there are no changes currently at the moment. But looking at construction for the past 6 months has actually been declining to the downside. Currently, it's at 49.3. When you look at services business, it's at 50.1, just slightly above the non-expanding, non-contracting region. But looking at the composite currently at the moment is at 50.6, just slightly above the expansion territory. Now, the Chinese region currently at the moment is going through a lot of difficulties, but we just had President Trump and President Xi meeting up earlier this week, whereby they did talk about a few things that they're going to enact, with the first one being the tariffs that they're going to offload. They're going to reduce the overall tariffs from 57% to 47%, and we'll want to look at that information. How is this going to affect price action in the near future? We are seeing rare earth metals deal being extended by 1 year, whereby we were looking at companies like, let's say, for example, Tesla, Ford also were in the bandwagon, whereby, remember, for these companies to make the automobiles, for them to make the motors for the electric vehicles, they do need these rare earth magnets, and most of these rare earth magnets come from China. Now, when there was tariffs being implied, there was a supply distribution being affected essentially from China heading into the United States of America, and vice versa. There was a disruption in the supply of AI chips coming from the United States of America heading to China. We have a question from the chef. If it closes above that range, I was thinking to go long and hold the trades over the weekend. Like-minded do think alike, but this is not financial advice, okay? We as traders do react to prices, but that's a really good thought process. The chef 32, if it does close above that region, technically speaking, long opportunities do look enticing. Now, moving over with the data. Currently, at the moment, as we are speaking, we are having data being released for the euro. Now, one thing I want you to be aware of is when you look at the economic calendar, currently at the moment, it's telling me it's 9 p.m., but my local time is 9 a.m., but my local time is 10 a.m. And if I pull up my chart here, where's my chart? As you can see, my money, my market watch currently is at 9:11, so it's 1 hour behind. Okay. Also, when I look at the economic calendar, it's going to be 1 hour behind also. So whenever you look at the economic calendar, if the news release is going to tell you it's going to come out at 7 local time, if you are in Nairobi, it's actually going to be 8 a.m. Okay. Now it's going to be 1 hour behind on the economic calendar. So currently at the moment, we are having data being released for the euro, especially Germany, whereby we do have retail sales coming in at the moment. And let's wait for the website to be updated. An important thing to note is that we are on the final trading day of the monthly candle, okay? This is the final trading day of the monthly candle. Now, the data has been revised from 1.8 to 1.4, quite interesting, whereby the actual number for the year-on-year compared to September last year, the data has actually come out at 0.2%, which is actually lower than last year a similar time. And we'll want to look at the euro. What does this mean? If I can pull up a chart of euro USD, we can see prices heading to the downside. And yesterday we did have this beautiful rejection of the golden retracement region on the Fibonacci level, whereby prices did make a low. This was during Fed Chair Jerome Powell's speech, whereby he did mention, okay, we are not going to have an interest rate cut possibly during December because of the result of not having government data. Like, let's say, for example, NFP data has not yet been released this month. We don't have key data that are going to prompt the Fed Reserve to justify more interest rate cuts. And when that happened, we did see the dollar gaining value against the euro. We had a short-term retracement on a Fibonacci level. This was a beautiful execution yesterday, whereby prices did retrace off the golden retracement region. Markets moved to the downside. Currently at the moment, we are seeing prices heading well below this region, and I would want to look at this region of support currently at the moment. This was yesterday's low price, whereby afterwards the market did enter into a period of consolidation, but the data has actually come out negative for the euro. The data has actually come out negative for Germany in particular, and we are seeing the markets move to the downside. If at all we do close below 1.15461, I would consider looking at more short opportunities in the markets. Whereas on the other hand, if you do break above this region at 1.15776, I would consider looking at more net long opportunities. Remember, for us traders, we do react to prices. Now, later on in the day during New York session, at exactly 1 p.m. we are going to have in the next 3 hours 46 minutes. So here it's telling me 2 hours 46, but remember, once again, this one is going to be 1 hour behind. We do have CPI numbers coming in for the Eurozone, harmonized total in general, whereby we would want to look at the core number. This is usually the one that has the most important weight in this, the whole of this release, whereby the previous number, the year-on-year reading compared to last year, October, the previous reading was 2.4. We anticipate inflation to move to the downside to 2.3%. The actual number has not yet come out. Now, we did see yesterday the ECB, if I can just pull up yesterday's data, whereby we had the European Central Bank meeting up, and they did hold interest rates. As you can see, they call it the main refinancing operations rate. So they did hold interest rates. Why? Because they want to see inflation going well below the 2% region for them to justify more interest rate cuts in the near future. Now, looking at it today, the data that's going to be released is going to be important. Why? It's going to affect what could happen in the near future. What could the European Central Bank do if at all the inflationary numbers come well below the 2%? This is where they want to see the numbers at. Remember, if inflation peaks to the upper side, the central banks usually tend to increase interest rates to fight inflation. But if the numbers do come out lower than expected, they do lower interest rates to basically stimulate the economy. Then towards the end of the day, we were supposed to have PCE numbers, which is the personal consumption expenditures number. But currently, as a result of the ongoing government shutdown in the United States of America, this data is not available to us currently at the moment. Not only this, we don't have NFP data for this month, as well as major news releases that were supposed to come out this month as a result of the government shutdown. And we want to see how this would roll over to the new month. Currently, at the moment, the government has shut down for 30 days. They did shut down on 1st of this month, and currently there are no talks of things opening it up. Now, also the commitment of traders, which is a very important set of data that I usually look at, whereby we look at institutions. How did institutions buy and sell into the markets? Let's say, for example, on gold, oil, the S&P 500, the British pound, the Japanese yen, the euro, and the Australian dollar. All of this data is not available to us because the CFTC is part of the government, and they are the people in charge of releasing this information to us, the public. But at the moment, they have been followed, and the data is not going to be released. Now, when we head over to the weekend, one thing I want you to be very careful with is that we are going to have the DST. What does this mean? It means that over the weekend, the clocks are going to be moved forward. Technically, when you're looking at the United States of America, the markets are now going to open at exactly 4 p.m. local time. Currently, at the moment, New York session opens at 3 p.m. But from Monday, we are going to start opening. Okay, so please know that the daylight savings time. This is available to us, which begins on the last Sunday of March and ends on the last Sunday of October, meaning by next month, which is going to be Monday, the market's New York session is going to open at 4 p.m. That's a very important thing for you to note. Why? Because it means that also the news releases are going to be affected. Most of the times currently at the moment, we are seeing news releases being released at exactly 3:30, but from next Monday, essentially, it's going to be released at 4:30. Most of the news releases are going to come out at 4:30. New York session is going to open at 4 p.m. This would be Nairobi time. Quite an interesting thing to note. Now, I want to switch over to the charts. This is whereby we make most of the money. This is whereby everything usually happens. Yes, we have this information, but how do you apply this information to the technical charts? How do you make money as a result of the little bit of information that it's available to you? And I want to start with gold. Quite interesting asset. Where are you? Here it is, XAUUSD. Now, if I can zoom out of this chart, ever since 20th of October, we did see gold make a high, an all-time high around this region at 43.79, 43.80, if you can just round it off. But we saw massive offloading of positions on gold, whereby it did lose almost 11% of its total value in less than 130 hours of trading. But interesting price action that's currently ongoing here, whereby the markets are now changing character, whereby we were making lower lows, lower highs, lower lows, but it reached a particular point in time whereby the markets now broke the most recent lower high that was around this region, and this low at 39.15 failed to break 38.84, and then the markets have started making new higher highs, higher lows, higher highs. Could this be a potential higher low this Friday for prices to continue moving further to the upper side? If you look at it on a higher perspective, yes, we did make a high. Could this be a short-term retracement for prices to continue moving further to the upper side on the precious metal, whereby in the past, how many hours ever since this low, we have seen prices move almost 3.37% in 67 trading hours, which is quite decent amount of range, whereby gold is moving currently at the moment. We are rejecting the lows that was just formed during Asian lows, and if at all we do break this region, I would consider looking at more net long opportunities on the precious metal at 40.43, potentially prices coming back to these regions of inefficiencies that we did see during open prices of Monday at exactly 40.96, which is a psychological level when you look at it, whereby if I can bring up a measuring tool from where prices are to that range is almost 750 pips to the upper side, meaning a 0.01 could be potentially $75, a 0.1 $750, a 1.0 $7,500. But on the other hand, we also need to look at selling opportunities, because the markets can move in either directions, whereby if we do break this low around Asian session, the low that was made during Asian session, I would consider looking at shorting opportunities, potentially prices coming back to 39.15 region. This is all going to be dependent. But once again, today is the final trading day of the monthly candle, meaning you have to be very careful. Monday is going to be the start of a new monthly candle, and usually most of the times we see a lot of volatility during the closing prices and opening prices of higher time frame candles. Looking at silver, silver has a much more clear price action compared to gold, whereby we did see prices make a low around 45.628 region an ounce. Then the market rally to the upper side, broke the most recent high. And yesterday we were looking at these two regions. If you have been on the morning market call, we did look at 47.9 region, and we did identify if prices do break above this region, there's a potential of prices moving further to the upper side. Ever since yesterday's morning market call, which was around this region here, prices is now 2.78% to the upper side. This is more than 1,333 points on the silver metal. Quite interesting. Looking at silver, it has the highest pip per value, whereby yes, it potentially can make you a decent amount of returns if you are on the right bandwagon. But currently, at the moment, the bulls are taking over the markets, whereby we are now making high highs, high lows, a potential high. If I do see a short-term retracement back down to this region, I would consider looking at more net long opportunities. But on the other hand, if I do see prices closing well above 49.208, I would also consider looking at more net long opportunities on the silver metal. Quite interesting. Looking at how the monthly candle is going to close this Friday. Looking at the S&P 500, whereby yesterday we were looking at this channel and we had identified this trend line to the upper side, and we were looking at long opportunities if the markets did break around 69.29. Now we didn't, but the markets we were looking at the opposite direction was 68.54, whereby we did see the markets break to the downside, but we closed above that range. Currently at the moment, the markets are consolidating. Quite interesting. Once again, today is the final trading day of the monthly candle, and sometimes we do anticipate this price action to play out. Why? Because the month has already moved quite decent, and the markets will want to relax towards the closing price and then wait for the markets to open again on Monday for the new monthly candle. Not only on the S&P 500, when you look at the Nasdaq, which is the US 100, similar price action. US 30 has been also in a channel currently at the moment, and we would want to look at how markets are still going to break. If we do break to the upper side at 48,069, I would consider looking at net long opportunities. But also at the same time, if we do break and close, keyword here is break and close to the downside at 47,429, I would consider looking at more short opportunities on the Dow Jones Industrial Average. Now, oil prices have been stabilizing, whereby currently at the moment we are trading around the 60.55 region, whereby if I can pick up my crosshair for the past 69 hours, almost 70 hours of trading, prices have been stabilizing around this region. Now, we did see prices move to the upper side last week. This was the result of the US sanctions on Russian oil, whereby the United States of America did sanction oil refineries in Russia. Now, when you look at Russia, Russia do produce a lot of energy. They do supply a lot of energy to Europe and other parts of the world, especially when the war did start. We did see production of oil, supply of oil essentially from Russia to the European region was at 45%, but after the sanctions, currently it's lesser than 20%, and come January, it might actually go down to 12% with the ongoing sanctions. Now, when this happened, Russia had to supply oil to somewhere else, and these two places were India and China. But with the most recent sanctions, there could be developments of now oil being disrupted as a result of the supply. Once again, when you look at Russia, Russia do have a lot of energy reserves within them. Now, if this continues to persist, the oil prices could potentially move to the upper side. Now, seasonality speaking, whenever you're looking at oil prices, we are about to enter into winter. Now, countries that are in the extreme northern hemisphere, it usually gets a bit cold. Now, they use more energy around this period to heat up their homes. Why? Because when it gets cold, more natural gas is going to be used, more oil is going to be used as a result of the cold temperatures, and human beings will want to be warm. Meaning oil prices usually see an uptick in demand towards winter season. Now, we would want to look at oncoming data. How are the markets going to react with fast seasonality speaking? And also, how are the markets going to react come January with the ongoing sanctions of oil supply from Russia into the other parts of the world? Now, we did see peace talks in the Middle East, which is quite good for the commodity, whereby, yes, the Middle East does produce quite a decent amount of oil. And if the ongoing peace deals are successful, we did see breaches of the contract between Israel and Gaza, but more developments on that will come with time. We would want to look at, will they break the deal that they just made recently? If they do, that means that the commodity prices could potentially move further to the upper side. But if there's going to be peace talks between the two countries, the two regions, essentially, we would want to see oil prices stabilizing. If we do break below the 59.95, basically, if we do break below the 60, whereby we currently do have a region of support forming at the moment, I would consider looking at short opportunities on the oil prices, potentially coming back down to this region around 56.30 dollars a barrel on the precious metal. I've just started a segment whereby I would want you to engage with me. Which assets would you want me to look at? I have over 300 assets here. I cannot analyze 300 assets in just a short amount of time. This is whereby I want you to engage with me. Which assets would you want me to look into? Now, the US oil and UK oil are positively correlated, whereby they do have similar price action within them. Now, US oil is more of a refined oil, but UK oil is more of crude oil. But technically, they do move similar. You can also see in the past 65 hours of trading, prices have been consolidating around the 64.7 British pounds a barrel currently at the moment. So the chef wants us to look at Euro USD. Beautiful. Quite interesting. Yesterday, I did have a beautiful sell on the euro against the dollar. If I can just pull up my trade history here, whereby I did execute a few selling opportunities on these asset of ours, whereby prices did make a low. Once again, this massive candlestick that we are seeing here. This was when Jerome Powell hinted that, okay, we are not going to have an interest rate cut come December as a result of no government data that was released this month, especially with the non-farm payroll, which is a very important data that the Fed Reserve usually look at. Now, when we had this massive move to the downside, we are seeing currently at the moment prices form a resistance at this high. And the markets did make a low that broke the most recent low. Currently, at the moment, we are making lower lows, lower highs, lower lows, lower high. Could this be a potential of resistance forming? And if we do break below 1.15461, I would consider looking at shorting opportunities on the markets as time moves on. But on the other hand, we have to look at also if the markets do break to the upper side at 1.15776, the markets could move to this region of inefficiencies. If I can pull another Fibonacci, whereby from this high to this low, potentially the 60%, the 61.8, the 50% region could act as a major region of resistance for prices to continue further to the downside. This is my view on Euro USD, but once again, be very careful because today is the final trading day of the monthly candle, whereby we do anticipate either the markets to retrace close or the markets are going to close where they are currently at the moment. Okay, the chef wants us to look at USD Canadian dollar. Do you have any questions from East Africa? The dollar against the Canadian dollar, where are you? USD card, okay. Now, they just, Bank of Canada recently had a meeting, and we will want to look at that information. I do believe it was Wednesday, just before the Fed Reserve did lower interest rates. Bank of Canada also did lower their interest rates. If I can pull up this article here, whereby at exactly 4:45, Bank of Canada did lower the interest rates. What's your FIB settings? I just have 3 levels. I'm going to show you currently at the moment, but we did see Bank of Canada lower interest rates from 2.5%. They did lower by 25 basis points, which was anticipated to 2.25%. Now, if you look at the report did talk a bit about what they do anticipate in the near future. If we can just open this article. Now, this is from Bank of Canada, whereby we have been seeing them lower interest rates quite a bit ever since 2024. We have been seeing prices back in June 2024, interest rates were at 4.75. Currently, at the moment, it's at 2.25. Now, inflation has been moving to the downside, and Bank of Canada has justified their policy rate by lowering interest rates. They are seeing the economy heading in the right direction. Inflation is cooling down. Therefore, they would want to stimulate the economy by lowering interest rates. Now, we did see ever since that Wednesday, prices moved to the upper side around that region, and then the markets did break this region of resistance, but we closed below it. And this is quite interesting, looking at US dollar against the Canadian dollar. If we do get candlestick closing above this region of resistance, I would consider looking at more buying opportunities on the dollar against the Canadian region. But looking at it from also a selling point of view, if the markets do break below 1.39790, I will consider looking at shorting opportunities on the dollar against the Canadian dollar. Potentially prices coming back down to this region that we just did form back in Wednesday. This was the low that was made during Wednesday at 1.38877. I do have a question on my Fibonacci levels. Which asset was it? The Euro USD. So if you look at my parameter, my levels, so these are the only levels I look at. I look at the 0, the 50%. I look at also the 61.8. I pay most attention to the 50% and the 61.8 region, and then I have the 100 region also. Now, with the Fibonacci level, it's quite interesting because you can actually invert it, but for me, I like to have it this way, whereby I'm going to have this as the 100% level, then this is going to be the 0. I want to see prices coming into the golden retracement region. If you see prices move into the golden retracement region, this is a confirmation that prices will continue moving further to the downside, as we did see it play out previously, whereby from this low to this high, you pull a Fibonacci, anticipating prices will retrace back into that region for a further continuation to the upper side. These are some of the strategies that I do mentor. If you are available around Nairobi, we are located at Westlands, the Oval Office, 5th floor, whereby we do have free Forex classes for you. I do mentor about these strategies that I do practice on it. If you look at my trading history, I do practice on these strategies that we do teach. Also, if you're not available in Nairobi, you can join us via the online sessions, whereby if you go over to our HF website, you have an opportunity under the tools and education segment, you have an opportunity to register for the trading classes. If I can just pull up these tab here. So if you go to the tools and education, you can register for the trading classes via our website. Let's say, for example, you want to look at, it's going to be updated very soon, but you have the opportunity to join our trading classes via the website. That's going to be it for me, unless someone does have an inquiry, of which I do believe none at the moment. If you have any questions from East Africa, I will reach out to you later during the day. That's going to be it for me. Once again, today is a Friday. We shall see each other come Monday. Be careful. Risk management is very important at this particular point in time. The goal number one of a trader is capital preservation. Money usually comes secondary. Always ensure that at the end of the day, you have an account that you can look forward to. For me, currently at the moment, this has been a very blessed month, particularly up 10% on this account. And it is also possible for you to do the same thing, whereby the markets can give you a lot of money, but you have to do the right thing. You have to be disciplined. You have to look at the markets the right way, treat it as a business, but also at the same time, you need to have a decent amount of capital for you to make money. It's easier for you to make 1,000 bob from 10,000 shillings, but it's very difficult for you to make 10,000 shillings from 1,000 bob. So once again, that's going to be it for me. My name is Ian Joseph Elkington, market analyst at HFM. I'm humbled to be at your service. Stay safe, take care of yourselves. I shall see you come Monday. Thank you. It's Francisco. The class is solid, and there's more where that came from. There's so much more where that came from. I really do appreciate it. And let's make that money. Don't be afraid to pull the trigger. Pull the trigger as many times as possible. There's only one way to find out, and that's by executing. I shall see you when you see me next.